Fort Financial is a member-owned credit union that has been serving Fort Wayne and surrounding communities since 1946. And Jay is here to bring us up to speed on home equity loans and home equity lines of credit, which I guess we can talk about the difference. But let's talk about the benefit, because there's some really solid things that you can do with your home to turn it into like fun things.
Yes, absolutely. Yeah, there's several benefits to having a home equity loan. One benefit is that in most cases, the interest that you pay on those is tax deductible, which on most other loans they're not,
right?
Which is a big benefit. Most people have to talk to their tax professional to make sure that it is tax deductible, but in most cases it is. In addition, a lot of times you can use the equity in your home. Up to 90% is what most financial institutions will allow. And a lot of times if you've remodeled or you've done any type of improvements or anything that maybe you've added additional things that your home is worth more, you're able to tap into that equity.
It feels like, well, maybe I shouldn't bring this up because maybe we somehow got away with something. I always felt like we got away with something. When we had the home appraised, he kind of looked at what we wanted to improve it for, and then suddenly the appraisal value went up it was like, wait a minute, did we just flip the cart and the horse here? But I won't ask your opinion on that. I think I did get away with something actually, just based on your reaction. But Is it only home improvement things that I can use a home equity loan for?
Actually, it's not. Actually, that's one of the big benefits too, is because home equity loans can be used for almost any purpose. I mean, you can buy a car, you can pay for college expenses if you have kids going to college. Obviously, remodeling is simple, but really, almost any purpose that you want, if you're using that equity in your home, you can use almost for anything.
And so basically the credit union isn't going to ask, or are they going to ask where it's going? I mean, is this like a list of things that it has to be?
A lot of times they're going to ask just because they have an interest, but I mean, for the most part, it's not something that they're going to say, okay, well, you can't use it for that.
Right.
There's some things, obviously illegal things you can't use it for, but as long as it's legal, I mean, most of the time it's beneficial.
All right, now talk to me about the difference here between the home equity credit or the home equity loan, and then is it like a line of credit?
Yeah.
So I apply once and can pay it off and use it again?
Yeah, absolutely. The difference is with a home equity loan, usually those are term loans like a car loan. So that's how I would compare it to. You have it for a certain number of years, you have monthly payments, you pay it back in a normal time frame, and that's how it's used in that situation. With a line of credit, I look at that more, it's similar like a line of credit on a credit card, where you can take and borrow those funds, you can use them for whatever purpose, you pay them down, you borrow it back, you only pay interest when you're using the money. So it's a real benefit to having a line of credit.
Yeah, that's sounds kind of fun actually.
Yeah.
I mean, the mind starts to reel. It's like all these different things that I can do. Applying wise, application wise, it can't be like a mortgage, is it? I mean, it doesn't take as long, I hope.
It does not. I mean, in most of the time when you're looking at doing a mortgage loan, you're talking about 30 to 45 days from the time you start until you're actually able to close. With a home equity line of credit or a home equity term loan, those can be done, the fastest they can be done is about 7 days. For the most part, it usually takes somewhere between 15 to 20 days from start to finish. So about half the time of a normal mortgage.
And then I would only apply, if I get that line of credit, I only apply for that one time?
That's correct.
Wow, that is really a benefit.
Yeah.
All right, so again, as we look at this, is there an inherent cost to making it happen?
Yeah. For the most part, most of the time, most financial institutions will charge a fee somewhere between $150 to $750 because you have appraisals, you have title searches, you have flood searches, you have several other expenses, and most of the time they're going to pass that on to the borrower.
Right.
In some cases, though, like right now, Fort Financial, we're running a special. We're waiving all those fees. So, and a lot of financial institutions will do that. They'll waive fees during a certain period of time. It may not be all year, but it may be 2 or 3 months, and that's a big benefit.
It's a huge benefit. All right, if you'd like to find out more, give Fort Financial a call at 432-1561. 260-432-1561. We'll be right back on Insight.